How safe is Exxon Mobil Corporation's dividend? On August 2, 2019, Exxon Mobil Corporation reported second quarter earnings for the period ending June 30, 2019. This video provides an update on the company's dividend safety using its most recent operating results. Before we begin, I invite you to subscribe to our channel and like this video, which will help more people discover Sure Dividend's investor education efforts. With that out of the way, let's dig into Exxon Mobil Corporation's dividend safety. To begin, let's talk about Exxon Mobil's business model. Exxon Mobil is the largest integrated oil and gas company in the U.S. The company can trace its roots to Standard Oil, which was founded by John D. Rockefeller in 1870. Today, Exxon Mobil has a market capitalization of $305 billion with annual revenues of $290 billion. Exxon Mobil is one of the world's most popular dividend growth stocks. The company's current dividend yield is 4.9%. Moreover, Exxon Mobil is a consistent dividend grower. In fact, the company has increased its annual dividend payment for 37 consecutive years. Because of this, Exxon Mobil qualifies to be a member of the Dividend Aristocrats, an exclusive group of dividend stocks with more than 25 years of consecutive dividend increases. Looking ahead, investors interested in owning Exxon Mobil stock will likely be interested in the safety of the company's dividend payment. For the remainder of this video, we will discuss Exxon Mobil's dividend safety from four perspectives: its dividend safety in the context of its current earnings, its dividend safety in the context of its current free cash flow, its dividend safety in the context of its recession performance, and its dividend safety in the context of its current debt load. Exxon Mobil's dividend safety relative to earnings. First, Exxon Mobil's dividend safety in the context of the company's current earnings. In the second quarter of fiscal 2019, Exxon Mobil generated adjusted earnings per share of 61 cents, which compared quite unfavorably to the 92 cents of adjusted earnings per share in the same period a year ago. For context, Exxon Mobil currently pays a quarterly dividend of 87 cents per share, which implies a payout ratio of 143% in the most recent quarter. Looking out over a longer time horizon, the payout ratio is slightly higher. Exxon Mobil generated $1.16 of adjusted earnings per share in the first half of fiscal 2019. The company distributed $1.74 of common share dividends during the same time period for a dividend payout ratio of 150% in the full fiscal year. Using earnings, Exxon Mobil's dividend is not currently covered and could be at risk for a cut if this metric does not improve. Exxon Mobil's dividend safety relative to free cash flow. Many analysts believe that comparing a company's dividend payments to its free cash flow is a better method for assessing dividend safety. Accordingly, we will now compare Exxon Mobil's current dividend payment to its free cash flow. Exxon Mobil generated $6 billion of cash flow from operating activities in the second quarter of fiscal 2019 and spent $8.1 billion on capital expenditures during the same time period for a negative free cash flow of $2.1 billion. This means that free cash flow did not cover the company's $3.7 billion of common share dividends paid during the same time period. Looking out over a longer time horizon, our conclusion is the same. Exxon Mobil generated $14.3 billion of cash flow from operating activities in the first half of fiscal 2019 and spent $15 billion on capital expenditures for negative free cash flow of $700 million. That means that free cash flow did not cover the company's $7.2 billion of common share dividends paid during the same time period. Using free cash flow, our conclusion for Exxon Mobil's dividend safety is the same as when we used earnings. The company's dividend is currently not covered by free cash flow and could be at risk for a cut if this metric does not improve. Exxon Mobil's dividend safety relative to recession performance. Companies do not cut their dividends in the good times. Instead, dividends are reduced when companies experience financial difficulties. Accordingly, this section will analyze Exxon Mobil's current dividend safety in the context of the company's historical recession performance. We believe that the best way to measure a company's recession resiliency is by measuring its earnings per share performance during the financial crisis that occurred between 2007 and 2009. Exxon Mobil's performance during this time period is shown here. 2007 adjusted earnings per share, $7.28. 2008 adjusted earnings per share, $8.69. 2009 adjusted earnings per share, $3.98. 2010 adjusted earnings per share, $6.22. 2011 adjusted earnings per share, $8.42. 2012 adjusted earnings per share, $8.09. 2013 adjusted earnings per share, $7.37. Exxon Mobil's adjusted earnings per share declined 45% during the last recession. The company has not made a new high in adjusted earnings per share since 2008. More importantly, though, the company's earnings still covered its dividend payment, and Exxon Mobil continued its multi-decade streak of dividend increases. Because of this, we have little concerns about the company's ability to pay rising dividends during future economic downturns. Exxon Mobil's dividend safety relative to its current debt load. The last angle that we will use to assess Exxon Mobil's current dividend safety is by looking at the company's current debt level, which is a cause of concern for many investors. More specifically, we will see how much the company's weighted average interest would have to increase before its free cash flow would no longer cover its dividend payment. At the end of the second quarter of fiscal 2019, Exxon Mobil had $18.6 billion of total debt outstanding. The company generated $216 million in interest expense in the most recent quarter for a weighted average interest rate of 4.6%. Normally, we include an interest rate stress test in these analyses that shows how much Exxon Mobil's weighted average interest rate would need to increase before its dividend would no longer be covered by free cash flow. Unfortunately, Exxon Mobil's dividend is already not covered by free cash flow, so we have excluded the stress test from this video. We reiterate that investors should monitor this trend closely moving forward. Looking out over a longer time horizon, our conclusion is the same. Exxon Mobil generated $397 million in interest expense over the first half of fiscal 2019 for a weighted average interest rate of 4.3%. Again, normally we include an interest rate stress test in these analyses that shows how much Exxon Mobil's weighted average interest rate would need to increase before its dividend would no longer be covered by free cash flow. Unfortunately, Exxon Mobil's dividend is already not covered by free cash flow, so we have excluded the stress test from this video. We reiterate that investors should monitor this trend closely moving forward. In conclusion, thank you for watching today's video, which performed a deep dive on Exxon Mobil's current dividend safety. We invite you to subscribe to this channel and like this video, which will help more people discover Sure Dividend's investor education efforts. If you're interested in learning more about our systematic approach to dividend growth investing, visit our website at suredividend.com.